Hello there, Samurites. DavinchyFX. Let's get straight into it. So now coming into the market on a Saturday evening. So I'm making this video in preparation for next week because I need to be able to prepare for what we need. What we need to be guided up. We need to guide our loins in preparation for the coming week. So now coming into the market today on a Saturday evening. Market was previously bullish on EURUSD, as we can see. So now this was a valid pullback to me. And why was it a valid pullback to me? Because it met a particular criteria. It needs to meet your criteria. Do you have a rule? Do you have a system that you work with? So you need to have something that what you work with, because you know when there is no sin, when there is no law, there is no sin. In every community, in a society where there is no law, there is no sin. Just like in Forex, when there is no system, when there is no law to how you trade, there is likely to be error. So you can come in into the market on a Monday, and the market will be seeming to look bearish to you. Then you come in on a Tuesday, or let's just say you close the chart, you close your PC and come in after a few minutes. Then you just trying to zoom in or zoom out. Price is looking a whole different from the way it looked before, based on what you don't have a system, you don't have a rule to how you look at the market. So now you need to have a rule, and for DavinchyFX, the Samurais, we have a rule to everything we do. There is always a rule to anything I do in the Forex market. So now this met my criteria for a valid pullback. So now previously, before Friday, that was like on Wednesday or Thursday, we were formally looking to buy from here, which I had the analysis mapped out on my previous videos on YouTube. So now price can move without coming to your point of interest, so you just need to be able to be flexible enough. And as I mentioned in my previous video, flexibility is what the market needs. It demands your flexibility, not your ability to do one static thing, one permanent thing. You need to be able to do to flip your script. You need to be able to change what you are looking at. Like, you just need to be flexible. And you know the slogan for the Samurais, DavinchyFX, is what? Reaction over prediction. We are reacting. We are not trying to predict the market. We are reacting to whatever the market is doing. So if the market raises up an ugly head, we are ready to what? To face it back with what? With this and that. So now moving on, market was bullish. We were formally looking to buy from here. Then on the Friday before market close, price was sold massively and what? Closed below what? The structural what? Low, and giving us what? A change of character. So now we'll be looking to what? Sell this pair. So if I'm looking to sell this pair, after what? After market structure, what you should be looking for next is what? Point of interest. So you coming into the market, you need to keep it stupidly simple. Keep your strategy stupidly simple. So now, and as a professional trader always says, he says that what? If you cannot write your trading plan at the back of an envelope, let me say you're giving a pencil and okay, let's say write your trading plan at the back of this envelope. If you cannot do that, if you cannot write it out very quickly at the back of an envelope, that means it is too complicated. So now it's not necessarily like the strategy does not work, but how complicated it doesn't need to be complicated. It needs to be stupidly simple. That's my rule. Keep it KISS method. Keep it stupidly what? Simple. That is how it's supposed to be. So now, a lot of people they complicate their strategy. They try to predict the market. That's why most traders fail. And as you know, you just need to what? You just need to react. So now if I'm coming into the markets today, where would I be looking to sell from? So after market structure, what is market structure telling us to do? Market structure is telling us that market is currently bearish. So what are we to look for? We are to look for what? Point of interest afterwards. Market structure. So market structure tells us the direction that we should look to trade into. So, and point of interest will tell us where should we enter from. Where should we enter from? Market structure tells you direction. A point of interest, that's your order block, tells you where should you enter from before going that direction. So now, and you should know that if you are back again this week, you are already ahead of most traders. That's just what you need to know. as long as you are back on this channel again on this new week, let's just say beginning of this new week, you are ahead of what of most traders. So what, just like, subscribe, enter into the comment section whatever bothers you, like related to trading, whatever bugs you related to trading, just type it there. Let me see what I can do about it for you. So that is just keep it really simple. So now, after the reason why I'm marking this point of interest is what it represents what a valid order block. So now I am not a kind of trader that uses breaker block, because a lot of people uses a lot of complicated terms for their trading. So now it is not I don't know them, but what I use what works the most. So trading does not need you doing too much, like knowing, like having to do everything. Just what, know one particular thing and do it, like what, become a pro at it, as if like become so good at it that no one can beat you at it. Pick one particular thing that you are like that works, and what, become what, crazily good at it. That is how I roll. That is what I tell people, my friends, anybody around me. Like, become so good at something that nobody can best you at it. At the same time, you remain humble that, oh, learning never ends, right? But be so good at it that people feel like, damn, you are so good at this. That is how good you should be. What you should be with your strategy, with your system. So it is not necessarily just your strategy. Your system combines your risk management principle, your pullback principle, because your pullback must have a criteria. All those things, like everything comes, your trade management principle, everything comes in what, hand in hand. And a system cannot be made up of what, of one particular partition. A system cannot be one partition. It needs to be what, different partitions, different areas coming together to what, to become one, to become a system. So now a system combines everything you need to trade in. You need to be what, to get so good at your system that what, no one can beat you at it. That's just what, how good you need to be at it. So now, if this is my valid point of interest, what do I need to see? I need price what, retracing. So coming in on Monday, I need price retracing into my point of interest. So now, one thing you should also know is that it is not a must price must retrace into your point of interest. So that's what I normally tell you, that don't have one fixed thing you want to do in the market, because what, the market has what, it has its way of what, of scattering your plans. It has a way of what, of scattering your plans. So you don't necessarily need to what, have one particular thing you have in mind. Just what, be like, oh, if price gets here and does this, I will trade what, this pair. So now it should be based on if, not based on I must sell this pair, because all of a sudden price can start retracing, give you a valid pullback, then break structure further to the downside, then flip bullish, then break structure, break the lower high. Then you will still be looking to sell from here, right? Meanwhile, price has already flipped bullish. And why would that happen? Is because you don't have a rule for your what, for a valid pullback and what, for the non-valid pullback. So you need to have everything in mind. So now what I want to see here is, I want to know what is my structural low now, because price was what, price flipped from higher high, higher low, higher high, now towards to break this previous low. So I need what, a lower low. And how can I identify a lower low? I can only identify a lower low if price what, gets to a point, sells to a point, and what, gives me a valid pullback to the upside. That is when I can now pinpoint my what, my lower low, my structural lower low. So until that, I cannot know where price want to start retracing from. You don't need to force, you don't need to want to predict where price want to start retracing. You don't need to force it. All you just need to know is what is the market structure? Where is price likely to sell and price likely to do now? Is it likely to sell or buy now? Since you already know that, where am I to enter from? Since you already know that, you don't need to know any other thing. I see people trying to force, oh, okay, when is price going to start retracing? You don't need to know all that. You cannot know the market. You cannot know the entirety of the market. Market is so wide. So just know your part of it, then make the most of it. So now I need price retracing. Then if it gives me a valid pullback, then if it gives me a valid pullback like this. So now higher high, higher low, higher high, then taking out this low. So if it gives me this low and it gives me a valid pullback, then comes ahead and do like this, then takes out this high. Then this, so if it gives me a valid pullback and takes out this low again, giving us another further BOS to the downside, right? That means what? This zone becomes what? Invalid. And I'm not looking to sell from here anymore. This will be the new place I'll be looking to sell from. This will be what? The new place I'll be looking to sell from. Then if this zone gets invalidated and price closes above this high, and price decides to close above this high, that means what? This zone also have been invalidated. That means price has flipped bullish. I would now be looking towards to buy from here. As easy as that. So it's what? That means I would not be this point of interest has been invalidated, is now irrelevant to me. Now, as price check out this high, this is not the what? The new origin. So the origin is what matters most. The origin is what matters most. So now, if we are looking to trade this pair, we'll be looking to sell EURUSD from our point of interest. That is that for EURUSD. So moving on to the next pair, GBPUSD. So GBPUSD has been solidly bullish, just like, because it's most of the time GBPUSD does the same thing EURUSD does. So now it has been bullish, steadily bullish. Then before market close on Friday, it flipped bearish, taking out this structural low. So now we need a valid structural low. A valid pullback will make us know the valid structural low. But for now, if we are looking to sell this pair, we'll be looking to sell this pair from this zone. That is that for GBPUSD. Moving on to the next pair, GBPJPY. So GBPJPY, most of the time, if GBPUSD is bullish, there is a higher tendency GJ will be bearish. If GBPUSD is bullish, there is a higher tendency GJ will be bearish or is looking to flip bearish. But now look at this scenario. GU is it flipped bearish right now, right? Now, but GJ is still bearish. So there's a higher chance that GJ is likely to flip bullish. But at this point, you can see that it is so far from the structural high, because this is the high GJ needs to take out before it can flip back bullish. So right, except if it takes out this low, then takes out this high that caused this low to be taken out before it can flip bullish. But for now, GJ is bearish. Even if GU is bearish still, we are working with market structure, not sentiments. For now, this is my outlook on GBPJPY. Until proven otherwise, it is bearish. Until proven otherwise, it is bearish. Moving on to the next pair, USDCHF. So USDCHF has been bearish also, because GJ does, most of the time, it does exactly what USDCHF and USDCAD does. So for most of the time, it does exact same thing that USDCHF and USDCAD does. GJ, that's what I'm talking about. So now GJ was bearish, just like when USDCHF was bearish, just like when GJ was bearish. But now USDCHF has flipped, meanwhile GJ has not flipped. But at the same time, we are not working based on sentiment. So this is a valid pullback to me. It met my criteria for a valid pullback. So a lot of people will still be looking to sell from here. Meanwhile, to me, price already flipped bullish. But to them, price is still bearish based on they will still be looking to sell from here. But for me, based on my rules, so it is based on rules. And for a person that trades 1 hour structure, we will not be able to see this. The 1 hour structure trader will be looking to sell this pair too. But for me, based on my 15 minutes already gave me an hint of what is likely to happen even before it happens on the higher time frame. So the smaller time frame most of the time tells us what is likely to happen on the higher time frame. So it's just like how am I going to call it? What name am I going to give to it? Just like something that sees the future, a seer. Yes. So the smaller time frame is just like a seer for the higher time frame. So most of the time, that's why we use the smaller time frame for confirmation most of the time. The higher time frame is stronger, but the smaller time frame most of the time tells us what is likely to happen in the higher time frame. So, but you need to be able to work with the reaction mentality. That is how trading is supposed to be. So, if I'm looking to buy this pair after it's taking out the structural high, after taking out the structural low, bearish, would have been looking to sell from here, then it flip back bullish. Now taking out the structural high. So if I was looking to buy this pair, this is what a valid order block over here. So if I'm looking to buy USDCHF, I'll be looking to buy USDCHF from this zone. So the reason why my zone was formerly big is because I went down to the 1 hour time frame to look for an higher zone, but I trade the 15 minutes. I can also what. So now, if the order block is wide, you can go to a smaller time frame to pinpoint a particular order block inside the order flow of the higher time frame. So now the order block can be inside an order flow of an higher time frame on the smaller time frame. So it will be tinier and precise on the smaller time frame than it will be on the higher time frame. For precision, you use smaller time frame, but for you don't know the certainty of where price is likely to react from, you use the higher time frame. So that's how it works. So for USDCHF, I'll be looking to buy from this zone. If price does not pull back and give me another further BOS to the upside, to wherever I before price starts retracing. But for now, this is my analysis on USDCHF. Moving on to the next pair, USDCAD. USDCAD also was previously bearish. You can see this pair. So now I marked out this analysis. I have this analysis on my page, on my YouTube channel. Sorry. So now I marked out this zone to sell from. Then I waited. When did it play out? Let me see. This was on Wednesday. Yes. So now the only reason I did not catch this trade because price tapped my zone in an Asian session. That's why I said most of the time price plays out, but it might not give you exactly what you want. So it is not bad for you to sit on your hand if you're a confirmation trader. But for an aggression trader, they would have caught this beautiful 1:10.92, which is equivalent to 1:11. Beautiful. After price swept Asia high, tapped into the zone, massive drop. So now if I was looking to sell again. So when price started retracing over here, I was looking to sell from here. Then price came back and broke structures further to the downside. Then this zone becomes invalid. Now we would have been looking to sell from here. Then now price invalidated this other block over here. You can see breaking the previous. So you can see how easy that is. Previous structural high, flipping bullish. So if I'm looking to buy this pair, there is no valid point of interest on the 15-minute time frame. You can go down to the 30-minute time frame. On 30-minute time frame, is there any valid point of interest? Not yet. Go down to the 1 hour. On the 1 hour, is there? There is, but it is looking too big. Let's see if we can see on the 2 hours. On the 2 hours, you can see. So it is more visible on the 2 hours time frame. So go back to the 15 minutes. So if I'm looking to buy this pair, I need a confirmation anywhere inside this this zone. That is how simple it's supposed to be. Simple. Confirmation traders, this would be beautiful for us if we wait for Asian accumulation close to the zone or even inside the zone. Then if London sweeps the low of Asia, we wait for a confirmation. They will enter from from the zone, giving us confirmation. Our stop loss below the structural low of the confirmation of the confirmation then our TP to the structural high of the 15 minutes. Easy as that. That's my analysis on what USD CAD. Then the last no, not last, let's move on to gold. So we'll be doing few analysis for crypto traders also. So on gold, so now gold, this is a very beautiful setup, but we missed out on it. I just did this analysis based on if I'm going to catch it. So this was where I was looking to buy gold from, but Friday rush was so massive. Price moved really fast without tapping our zone. You can see price swept my Asian low. This was my Asian low over here. Price swept my Asian low, was selling into, I just wanted it to sell into this zone, but it gives me an early reaction in this order block over here. But for me, I don't like selling from decisional order blocks. So even if it plays out, I do not mind missing out on the trade. But I marked out this zone. If confirmation subs there, I'm not going to take it, but I'm going to mark it out. So but unfortunately for us, this is where the confirmation would happen. Meanwhile, I was looking for the confirmation to happen here. So I do not mind missing out on trade. That's how disciplined you need to be for you to be able to trade. You don't need to catch every setup, because what you will see more. This is actually 1:35. So assuming when the confirmation happened, I entered the trade, I would have been catching a 1:35 on gold. But I decided to sit on my ends. That's how what determined and what discipline you need to be. So now I got to the confirmation, then I entered with precision. You can see I entered with what great precision. You can see I went to the 3 minutes to mark out my order block. You can see, look at how precise that is. That's how easy it's supposed to be. So 1:35 on gold would have would have paid off your rent or whatever you need, depending on the lot size you use though. So that is that. Or if you trade a $200,000 profit, risking 0.5% per trade, that's $1,000 per trade. $1,000 times 35, that's, you would have been making $35,000 from this trade. That is the beauty of high risk to reward. So moving on to the next analysis on gold. If I'm looking to buy gold again, this is my new structural high now after price took out our previous high. This was our previous high. Price was retraced, tap into this decisional order block, bought to the high upside. This zone becomes invalid. So now, what is the new zone? Where else are we looking to buy from? I'm not looking to buy from a decisional order block. This is a decisional order block. I'm not looking to buy from there. If I'm looking to buy, this is where I'll be looking to buy from. So I'll be looking to buy from this 1 hour order block over here. So if I'm looking to buy this pair, I'll be looking to buy this pair if price taps into this point of interest. London session specifically. That is that for gold. So this is my analysis on gold. That's how easy it's supposed to be. Easy, beautiful. Keep it stupidly simple. That is how it's supposed to be. So we're moving on. We're doing few analysis for crypto traders because I have lots of them bugging me in my DM. So I'll just do a few analysis for them. BTCUSD. So BTCUSD has been solidly it flip bullish and it has been buying ever since. You can see flip bullish, retrace, buy, break structure, retrace, buy, break structure. This is not a valid pullback to me. This is a valid pullback, buy to the upside. Then now this is where we want price to retrace into before we can buy. But BTC crypto has been doing a lot of shitty movements nowadays. That's been moving somehow. So we are sitting on our hands if price does not if London session does not sweep Asian low and drive price into this zone without taking out this low. We are not waiting for confirmation to buy BTCUSD. Moving on to the next pair, ETHUSD. ETHUSD has been solidly bearish after price took out this previous low over here, took out the high, not a valid retracement. Then this is the structural high, then sold to take out this low. Now it has been retracing ever since. So if If price what Asia accumulates, London drives Swiss Asia high, taps into our zone and gives us a confirmation, we'll be selling ETHUSD from here towards to the structural low. That is that for what ETHUSD. See you lot in the next video. Don't forget to like, subscribe, make sure what you share this video on any platform you are, yes, share the video and what and turn on the notification. See you lot in the next video.